Hi, this is Nilus Mattive for Money and Markets TV. I've been getting a lot of questions about the possibility of higher taxes on dividends beginning next year. So today, I'd like to address that question and a few other important inquiries. First, a little background. Right now, most dividend payments get favorable tax treatment because of the 2010 Tax Relief Act. But President Obama has proposed that rates on dividend income revert back to the normal income tax rate for upper income folks, which is 39.6%. Add in the 3.8% tax rate on investment income from the 2009 healthcare overhaul, and the upshot could be as much as 43.4% of all dividend income going back into Uncle Sam's pockets. And unless Congress acts by the end of this year, rates of dividend income for nearly all Americans will revert to today's income tax rates. Some people say that if this happens, there will be a mass exodus from dividend-paying shares, but I think that's way off base. First of all, the rates will not be anywhere near 43.4% for most Americans. That number applies only to ultra-wealthy investors. Plus, it's relatively easy to avoid any taxation on dividends at all. Just use one of the many tax shelters available, such as IRAs or even 401k plans. Also, keep in mind that Congress will probably extend lower rates for the majority of investors, even if they let higher income investors pay higher rates. Second, even if dividends are taxed at higher rates, history doesn't support the argument that taxation affects corporate dividend policy. After the original 2003 legislation lowered dividend rates, payments did jump, but studies suggest that jump was due more to a rise in corporate profits. And that theory is backed up by the fact that real estate investment trusts, which do not get favorable tax treatment, also boosted their dividends. Third, corporate America is showing no signs of slowing down its dividend payments, no matter what happens. In fact, a record 22 S&P 500 companies initiated dividend payments last year. And this year, we've seen another 5, including Apple. Speaking of Apple, a lot of investors are asking me whether I'd recommend the stock now that it's paying a quarterly dividend. But my answer is still no. I have no doubt that Apple will continue raking in big profits with its must-have gadgets and the iTunes Store. But I think there are other dividend-paying technology shares available at better prices and with far less hype. This is Nilus Mattive for Money Markets TV. Thanks for watching.